Our next guest company makes devices for diabetes patients and has manufacturing operations in Malaysia, Ireland, and Arizona, and said on a recent earnings call that their supply dynamics are in even better position now than they were just 3 months ago. Joining us right now to talk about how they're navigating trade uncertainty is Kevin Sayer. He's the chairman and CEO of Dexcom. And Kevin, first of all, thank you for being with us today. It's great to see you.
Well, thank you for having me. It's really great to be on the show.
Well, your stock has done pretty well since April when the president first announced all of these tariffs. But since your earnings call last week, I think it's down by about 15%. So what happened in terms of the overall tariffs? What did the street not like in terms of what it heard last week from you?
I think let me answer the tariff question first. We've studied the tariffs quite extensively. And as you said earlier, we do manufacture a very significant portion of our product here in the U.S. We do all of our R&D here in the U.S. and develop our product here. So we have a tremendous U.S. platform. We'll be affected more at the component level for components that we purchase outside the U.S. that we manufacture with here. We also manufacture in Malaysia and similar things. But we're comfortable we can navigate through that. And we've not had anything unexpected on the tariff front. With respect to our earnings call, we had a very incredibly strong second quarter with 15% revenue growth. We beat expectations on operating margins. It was a great quarter for us.
The street doesn't seem to think, though. I mean, the stock down 15%. What happened?
Healthcare is a sector has been taking a bit of a beating. We did announce on the call that I will be stepping down at the end of the year, and I think that caught a few folks by surprise. But this is a plan we've had in place for a long time, and we're very comfortable with. We'll climb back up. We just execute our plans, and things will go accordingly.
Barron said that the company shifted its focus from type 1 diabetes, which is the type you get as a child, to type 2 diabetes, which is the type you pick up as an adult. Was there confusion from the street in terms of that shift? Did you see a drop in the type 1 diabetes product sales as a result?
No, we remain very strong in type 1 diabetes. But as we look at the business over time in the areas of growth, there's 25 million people in the U.S. who have type 2 diabetes who are not on insulin. Mm-hmm. We've done numerous studies over the years and shown that we not only provide great data to these customers, but we actually save the healthcare system money because they become, they get healthier. We've had an expansion in coverage for these type 2 patients where the 3 largest PBMs now cover people with type 2 diabetes not on insulin. That's been a great growth segment for us. But we haven't ignored the type 1 segment at all. We're just looking to expand in markets where our technology will be very useful.
Okay, let's talk about your manufacturing and what you do here in the United States and what you still have to import. Maybe that's part of the issue here. You're manufacturing a lot in Arizona, but you have to bring in components from other countries that simply can't be supplied here in the United States?
For example, we buy subcomponents that are manufactured in Mexico and then fully assembled into the units in Mesa. We buy chips. Every sensor has its own computer chip. We are not concerned about tariffs as a cost driver for us. We believe we can manage through that. We're not going to increase prices to our end users for this. We're the lowest priced product on the market as far as patient out-of-pocket in this industry, and we expect to continue to be so. So we'll just continue to work through it.
What needs to happen from your perspective in terms of these tariff discussions? What would be the best case scenario for you? What would be the worst case scenario?
A worst case scenario is if we had huge tariffs on these components, and I don't see that happening. We haven't seen anything along those lines. The best case for us is we manage through it, that we continue to expand and invest in the U.S. That will help us do very well, and we'll continue to do that.